Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Welcome, everybody. This is the Investor Financing Podcast, and I have a very special guest, a good friend of mine, a mentor of mine, and I continue to learn things every day from this gentleman. His name is Jim Ingersoll. He's in the lovely state of Virginia, and I originally met him years and years ago. I took a program called the Bank Elimination Blueprint, right? And dove into it over a weekend and kind of got a really good model. As I was starting to invest out of state, I was looking for some different financing structures that would make sense for my private money lenders and how I could structure deals. So I thought I'd bring Jim on the show today to talk about different ways to finance properties and creative structures and raising private money and the pros and cons of all the different financing out there. Jim is... He runs a mastermind group. He also puts on a big event every year. Unfortunately, I can't make this year, which is coming up in February. So Jim, will you just give a little brief background about yourself and talk about your event that's coming up? Yeah.
Okay. Yeah, I've been investing like full-time, like 15 years now, Beau. But before that, I was an engineer and worked my way through corporate America to the point that I got tired of it and jumped out. And we do an annual event. I'm a buy and hold investor. I do some flips as well. Started off wholesaling like a lot of guys did, a lot of guys and girls. And but now I do a lot of buy and hold. I really like apartments and single family homes as well. And every year we do an event. We've been doing it, I think, for 8 years now. Beau, you've been to it. This year it's called Dealmaker 2020 Live. We are essentially sold out. Bigger venue this year, Beau. We sold out twice, and we're going to have like 180 investors, so it's going to be a lot of fun.
That's awesome, man. I love the event. I'll definitely be there next year. So let's kind of jump into like the whole passive and the catalyst. Can you kind of explain? I think this is a fantastic model, especially for a lot of like the BRRRR investors and people that are thinking of ways if they have limited funds to get started in investing in buy, fix, and hold type properties.
Yeah, so, as we go around the country and we speak to groups like yours, Beau, and others, wholesalers, flippers, realtors, they're always like, I would like to buy and hold, but I can't because banks don't understand my lack of W-2 income, or I've got sort of marginal credit, or whatever it is, right? So why not just eliminate that bank? I mean, BRRRR is great. I love BRRRR, but why not like fund the front part of the transaction with private money and then move into permanent financing with a solution like you offer, Beau? Or if you're worried about even getting into that back end permanent financing with a hedge fund or commercial bank, then why not just use equity financing? And that's kind of where that grew out of. Like, how can you create a different box instead of just saying like, I need a bigger box? Why not just like eliminate the box entirely? And you go to a bank or you go to a hedge fund or commercial lender, they're always like, this is your interest rate, this is how many points you pay, these are the terms, this is how long it's going to amortize, it's going to renew every X years. But why not get rid of that entire model and just do equity financing, where you essentially borrow 100% of everything you need, you rehab it, you rent it, and then you just profit share from there. You profit share the monthly cash flow net, and then someday when the asset is sold, you profit share the equity gain as well.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
So looking at that model, if we took like a house that you were purchasing, let's say for $80,000 and it needed 20 in rehab and then the ARV is 150, can you kind of talk to us on how you model that with a passive investor and how you explain like how you're the catalyst and what you're going to do and what they're going to do and then how long of a deal will this be and how you set the expectations with them?
Okay. I like doing these deals in my own IRAs now. So I like my self-directed IRA to be the catalyst these days, because it isn't easy for like a small dollar IRA to grow. So for me, this model makes great sense at this point in my investing career for like small dollar IRAs, health savings accounts, educational savings accounts that are just sort of getting started. There might be $1,000 or $5,000 in there. And it's a way for that account to actually own the asset. And the way that it works is exactly like you said. So it works really easily if you've got somebody with a larger IRA just sitting there and nothing happening. There's a lot of dollars just sitting on the sidelines right now. And that larger dollar IRA or HSA or ESA will invest with the smaller dollar one. And together, they will joint venture and come up with this model that's all equity financing based. And because it's equity financing based, there's no UBIT, which is unrelated business income tax. And so it allows you to invest without even having to do a tax return and build out really a rental portfolio if you want to. And so I always tell people, just plan on holding the asset 2 to 5 years. The shorter the amount of time, the higher the return is for the person that's the financier. And the more work it is for the person that's the catalyst. Now, the catalyst is typically the investor. So for me, that's me. I'm on the street doing deals every day. I'm a deal junkie anyways. So why not just take some of these and do them with equity financing? And we'll do them between 2 and 5 years. But sometimes I've had them go longer than 5 years. If everybody's satisfied with the cash flow returns.
So that's actually so creative because let's just say you're very limited in retirement funds and maybe you have 5,000 in your account. You find the deal or your IRA goes into contract on the deal, then you bring in a larger passive investor who's got retirement funds and they actually essentially put all the money into the deal except maybe the $5,000. And then you do an equity share. So you split, after, let's say there's 100,000 of the other IRA's money in there, then after 5 years is up, now the asset's worth, say, $200,000, right? So you do a share on that extra $100,000 of equity, and then you split cash flows 50-50 per month into each other's IRAs. So that's a phenomenal way to supercharge a small retirement account, right? So like we all think like, how are we going to get to the end and get this retirement, right? Like it's overwhelming to think how much passive income and how much money we'll need in savings and retirement accounts. And look at this vehicle can go from $5,000 to $100,000 tax-free or tax-deferred in a very short amount of time by using these strategies. And that's why I love going to your events, because we always talk about strategies like this, which usually blow investors' minds that haven't been around this group for a while. That's a very creative structure. So if you're just getting started and you're younger and you're what you need now is cash flow and you don't want to wait till retirement age. You can do the same thing with 1,000 or 5,000 of your own money or 0 of your own money, doing the same kind of strategy where you're the catalyst, you're tying up the deal, you're bringing in the equity partner, you're splitting monthly cash flows 50-50 essentially, or whatever's negotiated. And then at the end, they get their initial money back and you split the appreciation and the equity that's built in the property through buying right, appreciation, and then also creating value by renovating the property.
Yeah, and you can also do this like in a health savings account. So you may not remember, I think it was 4 years ago or 3, I had my hip replacement. Mm-hmm. And the problem with, one of the challenges with being an entrepreneur is medical expense, right? Not only are our policies like, $1,000 to $1,500 a month, depending if you've got a family or not, but you've also got like a 6,000 or more deductible. So why not plan for that deductible expense tax-free in a health savings account, right?
Yeah.
And do a joint venture to pay for your deductible. And that's what I did. And that's the first time, like, I kept going to Jackson, Mississippi, and I knew like my hip was wearing out because I remember getting out of somebody's truck and I stepped and I'm like, oh my gosh, I gotta like replace my hip. I'm sick of this, right? But then it's like you get laid up, but even worse than being laid up is like, I know this is like $100,000 to do the surgery and I'm going to have a $6,000 or $7,000 deductible I'm going to have to pay. So why not do that deductible tax-free? And so what I did really quickly then is I took my HSA at Quest Trust and I joint ventured my HSA with somebody that had a lot of money in another IRA. They joint ventured together and we bought a rental property just like the one you're talking about. Say it was 80 grand and we needed 20,000 to fix it up. So my HSA borrowed 100,000 from somebody else's Roth IRA and we joint ventured together and we rented it for around $1,200 a month. We did a Section 8 rental back then. And so we had $1,200 rental income coming in every month. Our taxes and insurance are still low in Virginia. So let's say we netted $1,000 a month. Now that $1,000 a month, $500 of it was kept by my HSA and $500 was sent back to the Roth IRA. So on his $100,000 investment, he was making $500 a month as a 6% return on just cash flow, right? And for me, as the catalyst in my HSA, was making $500 a month, $6,000 a year, which happened to be the amount that I needed for my deductible for my hip replacement, tax-free. So I had all that. That was just coming in every month from my tenant paying rent. I had very little money in my HSA, probably $1,500. All I needed to fund was the amount for my earnest money deposit. And if you're buying houses direct from seller, earnest money deposits could be $50. So you don't need much money. You can borrow 100% in joint venture, 100% leverage. So as a catalyst, your return really is infinite. And as the joint venture partner, the person putting the money in, you're going to get a really nice monthly cash flow. That's like a dividend in a stock coming in every month. It's say whatever it is, 6% in this case. So then we hold on to that asset and we just sold it last year. And we sold it for more than 130. It might have been like, we might have netted like 145. Then so we take that, we divide it into that upside equity gain. $22,500 drops into the HSA. That's pretty nice on top of the $500 a month. And then $22,500 goes back to the big ticket Roth IRA. And that adds to his $500 a month he's been receiving. And everybody walks away happy. And what typically happens is the person with the Roth IRA is like, hey, can we go do this again? Jim, can you go find another house? And so we do that. We do that again. We rinse and repeat.
That's the beauty of it. It's like, and that's why like the network, we've all, I've gotten into your network and then let me ask you real quick, out of everybody out there, who are you most influenced by? And you're a very experienced real estate investor and done that, probably 1,000+ deals by now. We're pretty darn close to it. Who do you look up to as a mentor yourself? Because you're so experienced. I mean, who do you reach out to when you want to learn stuff?
Beau, I'll put you in that category. I so appreciate you. Cheryl was just in here. She said hello to you before we hit record. I mean, our family greatly appreciates you. So thank you. But, I learned joint ventures really in detail from Dr. David Phelps. I don't know if you've met David or not, but he's a dentist out of Dallas. And he and I he really helped lay the foundation of the joint ventures. And then, so I greatly appreciate that. Back before that, years ago out of Tampa was people like Peter Fortunato. Talk about getting a bigger box. He'll just destroy it because he's such a financing expert. and John Schaub, and of course Jack Miller, who died a few years back, really helped a lot. And the old Jack Miller seminars I used to go to in Tampa were great. Dykes Boddiford's another modern day guy. You can learn so much from Dykes about IRAs and trusts and financing. So there's a few right there.
And then also Jim and Daniel have a really cool inner circle mastermind. And it's what I really enjoy about it is it's personalized. It's you're not just a number. You're going to actually, when there's a meeting each week, you can actually get on and ask questions, and it's a smaller group, right? It's intimate. And when you have questions, I think the toughest part of this business is overcoming the fear of doing something new, right, Jim? Like for me, like I haven't done many like subject to deals and stuff. And so when I have those questions, I need somebody to go to, like, because we get paid the most as being deal architects, right? Like creating the deals and these structures. I mean, the majority of real estate investors just know the typical things, buy and hold, flip properties, but they don't understand like the actual deal structure, the deal architecture, like how to create seller carry notes and how to disposition properties and create, two pieces out of the notes and things like that. There's so many creative ways. And a lot of us look at deals and we think it's not a deal, but it's in fact a deal. And that's why I was looking at like the subject to model, for example. It's like if you find somebody that doesn't have a ton of equity, but has a really good fixed rate mortgage, you can take that property subject to. And even if they need a little bit of money, you can be super creative and borrow somebody's IRA for that gap money for the down payment that they need to move out of the house or whatever, right? So it's like, knowing how to put these deals together is the number one thing you can do. I mean, there's deals everywhere, even with low equity. And I think that's what a lot of us don't realize. We go, okay, well, it's a flip deal. We buy for this, we put in this, and it sells for this. But actually, if you take a tight margin deal, you can really, really, and when people are turning them down, that's good. Those are the golden eggs that everybody's overlooking.
Yeah, I think that's a great point. So creative deal structuring is really important because deals are in high demand, and like so many people are cold calling, thousands of people a week, and a lot of people are going to the same seller. And wholesalers, they've got their model for making only a cash offer. Only a cash offer. That's all a wholesaler can really offer is a cash offer to make an assignment fee. So they've got to have X amount in order to make that, and that includes their wholesale fee, right? So what if you were a flipper or a buy and hold guy and you went in after a wholesaler and the seller is like, man, I just talked to another investor and he wants to give me like this low ball offer, but I really want X, which is $15,000 higher. Is there a way to structure creatively to get that seller what they want and still allow you to create a deal that you need for your portfolio? And the answer is usually yes. If they've got no equity, then you can talk to them about subject to. If they got it free and clear, then talk to them about seller financing. Maybe you can get no interest, maybe a little bit of interest, maybe you can get a deferred payment. There's so many different ways to like slice all these deals up and build them out that that's a lot of fun.
So like right now in your business, since you're very well established now in your community where you're buying, are you getting most of your deals direct or for wholesalers? Because when a wholesaler brings it to you, it's kind of like on a silver platter and you can just make a yes or no decision. Is that where you got the majority of your business now?
I still get a lot of referrals. We bought 2 houses yesterday from a landlord. I'm working through his portfolio. He's got about 15 houses. I think I bought 6 from him last year, and we just closed on 2 more yesterday in January. Just as one example. So I've always enjoyed buying from burned out landlords. So I think my number one deal source has been referrals looking over the last 10 years, probably. Network.
Yeah. So that's pretty impressive. So when you first started as a wholesaler though, did you build your business on like direct mail, or how did you actually get started as a wholesaler when you first, you went from being an engineer to like, all right, I'm going to become a wholesaler. I'm going to do 100 transactions a year. What was the mindset shift and how did you go about getting it done?
Well, lots changed since I was wholesaling. So many technology drivers. And I mean, back then YouTube didn't even exist 15 years ago. There was no Facebook. There was none of that. So yeah, I did tons of direct mail. but that was before yellow letters. It was before cold calling. It was before text messaging even existed. So yeah, we did tons, and my kids would always help me. We'd go to Office Max and print like thousands of postcards. We'd cut them into 4 sections, and my girls would put the address labels on them and stamps, and away they'd go. So I did do a ton of direct mail back then, absentee lists mostly. But I also did a lot of bandit signs. I did everything. I did like 20 different marketing techniques in order to do 100 deals a year for sure.
And if you were getting started today with today's technology and what you know now, and you didn't have a network like you do now, what would be your top 2 or 3 things you would do as a new wholesaler or flipper or real estate investor to get started today to get the deal flow?
Okay, I think a lot of brand new people don't have like a large marketing budget. So you're not going to go hire like a team of VAs in the Philippines, and you're not going to build like a giant list, have it skip traced and pay people to cold call and all of that stuff. So what I've been challenging people to in January, Beau, as I've been speaking lately, is the next couple of weeks, just call people on the phone that are warm leads. I call this warm calling, not cold calling. And I challenge folks to this very challenge. And I got an email just a couple of days ago from a gentleman who told me he took me up on my challenge, and he just bought a house and created $50,000 of equity. So it may sound like it's not worth doing, or you may be a little uncomfortable doing it, but if you're brand new and you don't have a budget, here's what I want you to do. I want you to commit to calling 10 people on the phone for the next 2 weeks. These are people that you can go out and connect with that have a high likelihood of selling. They may not be motivated. They might not get the price you want, but you're going to gain experience. Okay, so first, the first 5 people every day, go back and recall people that you may have called last year. So this would be for people that were starting last year. Follow-up's important, and I think you should continue to follow up with people until they tell you to stop calling them. So go back and call them people, at least 5 per day. These are folks that life may have changed between 2019 and 2020. Also go back to anybody that you bought a house from last year. Okay, again, this is for a little bit more experienced people, but if you bought a house in 2019, whether it was a realtor, a broker, a wholesaler, or a direct from seller, a landlord, somebody who inherited a house through probate, a divorce, whatever the situation is, thank them for working with you in 2019. They may know somebody who's got to sell this year. Now that's easy, but say you didn't buy any houses last year. Here's what I want you to do. I want you to go to Zillow, pull up the for sale by owners, get on the phone and call them. Go to Facebook Marketplace and all the classified ads in your area. In Facebook, it's super easy. You don't even have to get on the phone and call somebody. Just message them through the direct messenger of Facebook. Get the information rolling. Also go to Facebook, go to the garage sales, and search for estate sales. Anybody that's doing an estate sale, direct message them and say, hey, I see you're an estate sale. Are you also selling the house? Now, go to Craigslist, same thing. Call every for sale by owner. And also in Facebook and in Craigslist, go and call all the landlords that are renting. And just say, hey, I see you're renting this house. This isn't property managers. Like you're really looking for mom and pop landlords, and just say, hey, if you don't want to sell the house, would you want to, if you don't want to rent the house, will you sell it to me? And if they say, no, I love being a landlord. I don't want to sell my house. That's what I would say if you call me. Then follow up with like, hey, if I find a house like this, would you want to buy it from me? Add them to your buyers list. Then go to gosection8.com, www.go-section8.com. Find all the Section 8 landlords in your area. You can message them right through gosection8.com and just say, hey, I see this house in Houston, Jacksonville, Las Vegas, wherever you're at. Instead of renting it to another Section 8 tenant, would you want to sell it to me? And just begin to block like 1 hour a day and commit to, that's what I call warm calling. These are people already that are for sale by owner, for rent by owner, and just have a conversation with them and see if you can find a deal. And when you find that deal, let Beau know.
That was like really, really good advice. And
it's free.
Yeah. And I catch myself, I think now many of us, and I can speak for myself, is that we think that technology is the end all be all. So we try to automate and try to create these elaborate marketing ploys, which, yes, some work really well, but really, if you really think about it, when everybody's now trying to do this technology stuff, you go back to the basics,
Right.
and you make phone calls. Nobody's making phone calls right now, or they're having somebody else make phone calls, and those people probably don't have the same skill set you do as building rapport. So if you're not getting deals, I mean, it really, I look at myself, I know I'm pretty good on the phone, and all I have to do is make phone calls, right? So if I'm not, and I like the fact that you're saying just do 10 a day, right? 10 is, if I set out and said, oh, I got to do 50 calls a day, then I never even do 50 calls. I don't even start because I'm overwhelmed to begin with. If I say I'm going to make 10 calls every single day, Monday through Friday, right? Start there. And you're going to start getting deal flow.
It's very easy. It's totally free. And believe me, everybody listening, I hate talking on the phone. I really do. And you may be uncomfortable because you're brand new. You've never done this. Just start calling, build that rapport, get used to talking to sellers about their situation, and find solutions where you can help them either creatively or with a cash offer. It's just, what it does is it allows you to get into the game for free. It doesn't cost a penny to do this marketing, and it buys you speed. You don't have to do direct mail and wait a couple weeks or a week for somebody to call you back. So you buy speed and you do it for free. You're going to be uncomfortable. That's okay. Screw all that. Get rid of your fear. Get on the phone. Do something that you don't love doing, and find yourself a deal.
I love it. I love it. And it's it's really kind of easy, but we sometimes internalize and make it more difficult than it really needs to be. And I think the more people you talk to, you're going to get a comfort level. And then when you're giving them offers, you're not just going to give them one offer, right? You're not going to just give them a cash offer, right? Because sometimes they get insulted. Oh, my house is worth so much more. You're going to say, here's 2 or 3 options that I can pay for your house. I can buy it on terms, or I could pay cash. What do you prefer? And you can, as you learn these deal structuring and how to deal architect, you're able to kind of craft these offers where a newbie investor might only give them a cash offer, and it's, hey, I'll pay 50 grand, and the sellers, no, I don't want it, and they're done. Whereas if you're studying these techniques, you can offer 3 options to them and say, what would you prefer option? And then have them give you the feedback, and then you work from there. Is that kind of ways you've done it in the past where you're kind of,
When you're on the phone with somebody and say it's a for sale by owner, they already have a price in mind. But talk to them about what you can offer that the other investors don't. Make sure they know you're not a realtor looking to place a for sale sign and do open houses, and make sure they know you're going to buy it as is. Make sure they understand that you can close fast, and that they don't have to do any repairs, no updates. You don't have to touch your kitchen. You don't even need to clean the house. You know what I mean? Just make it so easy that they understand, and then say, understanding that you don't have to pay a commission. We can close fast. You don't have to do any updates, no repairs. Don't even worry about, termites, lead-based paint, mold, all that stuff. I'll take all that risk. That being said, how flexible are you on price? You must have, a range in mind, or whatever it is.
I love it. I love it. That's really good advice. Now, on a personal level, what book have you read recently that has been one of your favorites? I mean, what's your top book that you've read over, say, the last 12 months that you would recommend?
I mean, there's so many. I'm reading a lot all the time, but if you want to build a referral business, which, like I said, all my deals come from referral in my network, go to 5 levels is really good. If you're a more experienced investor and you're having cash flow problems or not keeping as much money as you think you should be, then I recommend that you read Profit First. It's a really good book. I read it when I was in Italy last fall, Beau, doing a train from the Amalfi Coast to Venice. Read it in one day. And it really helps you understand, where is your money disappearing to? And, just is really good that way. So there's just so many. How about yourself, Beau? What have you been reading?
I've been more focused on kind of mindset stuff, and
Yeah.
because it all comes down to the mindset. I was talking to David Green from Bigger Pockets yesterday, and we were just talking about, it came down, it was kind of a harsh, like we did a podcast. It was kind of like a harsh interview because he's kind of like one of those kind of Andy Frisella guys, right? Like he's kind of, tell you how it is, right? And
It's good.
I think everything really starts with the mind. And I mean, real estate investing isn't like rocket science, right? It's kind of simple, really. And I think that people get discouraged because they're going outside their comfort zone. So the books I enjoy now are like Cal Newport's books, like Deep Work, like how to really get in the zone. And
I love that book.
And then I can set an hour where I'm focused on making phone calls and not get distracted, because I always set out with the intentions of, okay, I'm going to get deals today, right? And at the end of the day, I've done a lot of things, but I really haven't done the money-making activities. So I'm trying to set up like cues and triggers to like make myself do the things that are going to pay me the most for my time. Because at the end of the day, my goal is to have enough cash flow where I can then bring more value, kind of what you're doing right now, right? Like you've gotten to a level where you have a lot of knowledge and you have more time where you can share your knowledge. I think at some point, as you get more and more successful, it's like this automatic thing where you almost feel like, now I can give back. I try to give back now because I do have a lot of knowledge in certain ways, but I think if I look at my why, everybody talks about your why, and of course it's to be able to help my family financially and give them what they want, help my parents, but also to share my knowledge, right? So people don't have to struggle. There's so many people struggling in the world because they've never been taught like simple financial, literacy, essentially, right? So, I kind of see that as my why. So for me, I know I can bring a lot of value, but first I have to bring value to myself and create that passive stream that I'm looking for. And with me, I've fought just the mindset thing. So I'm going deep with books that are really kind of mindset, like Can't Hurt Me, David Goggins, like to build that resilience, because it's really, if I take his book and I put it into, say, cold calling, right? It's just getting on the phone and making calls. And when somebody gets mad at you, it's okay. Hang up the phone, be polite again and again and again, because the only way you're ever going to be successful is to get no's. I have a perfect example. I used to work out with this gentleman before I moved here to Las Vegas. He's 35 years old, and he's like the top apartment sales guy in the Bay Area in California, in the East Bay. And he's making millions of dollars a year, millions, and he owns over 100 units at the age of 35 or so. And I always pick his brain when I see him, and he says, I still lock myself in my office and make phone calls.
There you go.
There's no, and when I hear him talk and I, see him, it's confidence. He has confidence, and he might have some insecurities in some way, but when he's on the phone, he's a lion. And I really appreciate that about him, because it's not like he's some genius. It's because he's out working people, and his mindset is let's go for it. Let's make phone calls. If you really want it, you're gonna do things, and you gotta put yourself out of your comfort zone. So circling back to all this, it really comes down, and like that's what you're always reading. I'm always reading or actually listening, is because we have so much capabilities that we're not tapping into. So, I will always be a lifetime learner, and I love learning. Like I'll go to events like yours, and it's like, is there new information that's going to like give me that one thing that can change my business model? Of course, but I actually love, on top of learning these new things, is the energy around like-minded people, right? Like I need that in my life. I need people that are positive. So going to events, I always look at it as like, I'm going to at least get one nugget that can make me a ton of money, but I'm really going for the energy and to find people like that are wired like myself. And I think that's important, to stay around people like, to get on, like you do a weekly call. It's like, I haven't always been on it, but it's like to get on that call whenever I can. And it's just like that, an hour or 45 minutes, right? That's going to re-inspire me to do something. And so that's why when I started this podcast, it's like, I'm going to interview guys like you. We're going to get some nuggets out of the session. People, when we were talking about the small money IRAs and things like how to create a deal structure, there's all these little architecture deal structures we can flow. So it's like, I'm going to tap into this through my podcast, but I want to be plugged in more and then take action. And then, so books like that will help me do that is kind of my focus. It's not so much, I think you get more from like your mastermind group than I would from reading a book on real estate investing, right? You're going to get more from, live interaction. The books to me are more about personal development. So that's kind of the books I really enjoy now.
Mm-hmm. I mean, some of them, for people that are cold calling or building relationships, an old time book like Dale Carnegie, How to Win Friends and Influence People, would help a lot. If you're negotiating, then Chris Voss's book, Never Split the Difference, would be really good. For personal development, another one would be like Darren Hardy, The Compound Effect, or Think and Grow Rich by Napoleon Hill. You got to take out that head trash, and I'm glad you mentioned that. I've always said your network's your net worth, but I've added this year, Beau, which is your self-worth is your net worth also. Because if you don't believe in yourself, you don't have a positive mental image of yourself being successful, and people are constantly beating you down, then it's difficult to get over that first hurdle. So I'm really glad you mentioned that.
I love it. Well, I don't want to take too much of your time today, but I would love to bring it back at least 2 or 3 times a year, and then we can share a PowerPoint. And then just let people know how they can find you, please.
I mean, my main website is investingnownetwork.com. You can email me, jim@renovatedhousing.com. If you're interested in Inner Circle that Beau mentioned, it's rehabvaluator/inner-circle.
And when I get this podcast, I'll put all those links so people can just click on them and that things. Well, anyways, Jim, have a great rest of the day. I really appreciate all the time you've spent with me, and you're always willing to jump on whenever I want to interview you and pick your brain. And I'm glad that whoever's going to see this and listen to this in the future, I hope this brings a lot of value to you. And I think, out of everybody I've met in real estate investing, I would say that Jim is on the top echelon of somebody you want to learn from. And what I really appreciate about him is he's very genuine, right? He's not like this big guru type guy. He's just he's a normal guy that puts systems in place and when he was wholesaling at his prime, he was doing 150 wholesales a year or something crazy like that.
120 is the most I did, and I'll tell you, it's way too much work.
Yeah. But also, you're still flipping 60 to 70 houses a year. You were last year, right? Yeah.
I've toned that down too. All those active income streams are really a lot of work. So I'm trying to focus more on passive this year.
Yeah, and that's just the natural progression. You're going to start as an active investor, and then as you grow, you're going to get to a level where it's like everything is going to be done in an IRA because you don't need to make any more active income or earned income. It's going to be all tax deferred or tax free or tax deferred, right?
Yep.
And so that's like the evolution of a real estate investor. But I think for myself being 42 now, I need to do a little bit of both because I need to build my IRA, but I also need the money now. And so if you don't start a little bit at a time, you don't want to wait till you're 55 to start growing your IRA. You want to grow it as soon as possible. So anyways, without taking any more time, thank you so much. And I look forward to seeing you in the next couple of weeks on your Inner Circle group.
Thanks, Beau. I really greatly appreciate you and have a lot of gratitude. You're a giver and a great investor. Thanks for having me.
Thank you.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.